You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that music means it's time once again for the option block, a little bit of your bi-weekly options flavor. My name is Mark Longo, coming at you live every Monday and Thursday, noon Central, 1 p.m. Eastern. You guys know how to get it, Mixlr, or get the podcast pretty much everywhere. Seeing so much interest in podcasting these days. It's so nice. People spending, Spotify spending hundreds of millions to acquire various podcasting platforms and outlets. So good to see the love for podcasting continues to grow by leaps and bounds every week. Your love continues to grow. You know how to hit us up with your love or your interesting questions or comments. All the various places you can go to at options, theoptionsinsider.com. All that good stuff. And let's see who's joining us to talk about that good stuff today. Let's spin the wheel. Let's land. I think we're in the beans aisle of a Costco near you, where we are joined by the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, how is the bean selection today in Costco? I'm looking for a nice fava bean. Do they have them?
They've got the giant kidney beans, just like you like, Mark. So I've got those for you. And then, they've got a whole multitude of giant, person-sized macaroni and cheese boxes.
Well, there you go. Fava bean or kidney beans and mac and cheese. I'm just a happy man. I love myself some mac and cheese. Even though I can't eat it, I can look at it from a distance.
Oh, that's right. You're like one of those non-dairy people,
one of those
right?
crazy Southern Europeans who can't eat any dairy. Yes, that's what happens to us, unfortunately. But that's why I grew up on ice cream.
Stink.
I joke that I use up all my lactase at a very, very early age. All right, and also joining us, I don't know whether he can eat dairy. I guess let's find out. Let's toss it to Uncle Mike Tussaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show. How goes your dairy intake, sir?
Oh, I can eat me some dairy. I'll eat chocolate, my pizza, chocolate milk, ice cream, eggs, any type of eggs.
Oh,
I don't know if there's any type of dairy that I don't like, quite frankly. You could even say that I'm Wisconsin's most southern resident. I like that much dairy.
I like that. So taking regular trips up to the cheese castle on the border, are we?
Mars Cheese Castle?
You two are making me hungry and jealous. So without further ado, before I get more jealous, let's keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to the old trading block, a.k.a. the block of trading, a.k.a. the portion of the show we tell you what the heck's trading a little bit past noon central here in the old one, True Times. Another one of these kind of weird, kind of shoulder shruggy, kind of figuring out what the heck's going on, kind of feeling it out kind of days here on the street after we had some decent mitigating minor somewhat rallies, but still some rallies since our last show. Decent upside today, kind of taking a bit of a break. I guess it kind of depends where you're looking. Once again, S&P playing the Goldilocks role on the day, effectively unched slightly down, but not off a ton. And we're seeing the Dow off a little bit more, about not quite 0.2%, a little bit less than that. And we're seeing NASDAQ playing the leader to the upside, up about 1/3 of a percentage point or so. All this mixed stuff on the screen means VIX cash getting a little bit of green today, going to about a quarter of a point or so to a little bit shy of 16, about 15.90. Had a little bit of a nice little pop earlier in the day here to about 17 when we had a little bit more red on the screen earlier in the day. Things have kind of mitigated somewhat now. We saw we got as high as about 17.13 intraday earlier in the morning here in the VIX cash, and then we've kind of been vacillating around these bit lower levels ever since. Been a weird week, the maybe a little bit more conciliatory news on the trade war front coming out of DC. Trump saying, maybe I'll let that March 1st deadline slide. Yeah, we'll all be buddies here. And Mnuchin kind of chiming in and others as well, kind of making it sound like maybe things aren't as dire as perhaps expected. So all that giving the markets a little bit of a lift earlier in the week. And today kind of giving us this little bit of a shoulder shruggy type of day. Let's go back out to St. Charles. Uncle Mike, sir, what's catching your eye in this kind of weirdly mixed day?
Yeah, it's kind of weird that we started off down, and then now we're starting to rally a little bit towards the middle of the day. So I think that's kind of an interesting sign. I mean, I typically like that as a bullish sign. I want to kind of practice what I preach here, and then I always say on the show, risk management comes before indicators. And I got to admit, this is kind of a tough one for me in that I took some deltas off the table, and I still have some on the table to where if the market does rally, go into rally ho mode, that I will be a part of it. However, it's just kind of hard for me right now in that I am very bullish with everything that I'm seeing. We had a little bit of a pullback last week. We're holding the 2,700 mark, and I think there's a lot of reasons to be bullish. However, it's more important to manage your risk, and I'd encourage everybody to do the same with wherever they're going with it. A couple things that are catching my eye within the marketplace. I feel that the fact that it looks like we have the big names kind of leading the way, or the Dow, but tech does not seem to be liking this so far today. But I really think that has to do with the fact that they've had such a rally the last couple of months. And I don't know if this is going to be a broad-based rally in the next couple of weeks, but I do believe we are going to continue to rally. But like I said, my rules dictate that I need to have fewer deltas on the table right now because we had a really nice January. So that is what is catching my eye right now. And the deltas are in regard to my aggressive strategy.
See, got to follow the rules sometimes. Yeah, we saw an interesting morning here out in looking at SPY right now. Got as low as at 273, about 20 or so, and now we're up about a little bit north of the 275 level. So yeah, it was obviously a little bit lower, hence VIX cash getting a little bit of that lift. Now it seems like greener heads are prevailing. So some of that vol coming back in. Let's talk a little bit of vol and what else was catching your eye. What's been lighting up the pit chat this week and indeed today, Mr. Meatball?
Yeah, how about kind of the stiff VIX? As we're having a couple of really
VIX.
nice...
Is that a technical term? A stiff VIX?
Stiff. Yes, the stiff.
That sounds like a drink that we should serve at an option block.
It kind of does. I was thinking the same thing.
VIX. Well, it is Valentine's Day. Everybody wants a stiff VIX on Valentine's Day. But no, in truth, I mean, it was really kind of troubling the way that the overall market really just was not responding to vol risk. I mean, we were having a big rally day, and the market is not going, and vol's not coming off. we've got a big sell-off day, and vol started really pretty sharp to start the day, and then kind of gave up the ghost and is now threatening to be down on the. I think we could see the VIX down on the day when all is said and done, which you would have never thought when we were down 18 handles. So that's kind of what I'm seeing.
I'm still terrified by the stiff VIX. what would be in that? A little bit of vodka, a little bit of cran. So it's kind of almost like a better Cosmo, because it's got to have a little. Well, I think a VIX drink has to be red. I don't know why. Just to me, it has to be red.
I'm thinking it's got. I was thinking kind of like Vixen. So maybe it's got like some. Maybe it's got some champagne in it or something like that. To add a little.
Now you're losing factor. Me. Go with some vodka, maybe something grenadine or cranberry, something red, and then get some other stuff going in there. We'll have it put it out to our audience. As long as it's no gin and probably no champagne, then I'm down with it. But
that's what we should do. Let's put out a poll for a listener poll to see what would you put in a stiff VIX. Let's do that for this week.
What's in a stiff VIX?
Oh, all right. Well, maybe I will do that, but I have to do some talking here first, so it's hard to post these live polls. But maybe we'll do it. Maybe I'll put it out to our producer. Can you put out a live poll right now? What ingredients? We'll have to give them some choices, though. We have to give them choices. Okay, choices could be vodka. No, we can't do choices then. Maybe we'll just put it out there. What are the ingredients should be in a hashtag stiff VIX?
Tweet at. Yeah,
there you go.
Tweet at us
let people tweet out their own ideas, because if we put 4 choices, then it's just going to get crazy, and someone's going to say champagne like the meatball, and then it all goes downhill when you start.
Nothing's wrong with a little champagne.
When you start talking champagne,
well, it's not stiff then if it has champagne.
Exactly.
Right?
Well, there's nothing stiff about a champagne.
If it's champagne,
then you need
vodka,
to have that would be the flat VIX.
Yeah.
That'd be the bubbly, frothy VIX. That's what you drink when it's like VIX is like 45. Then you have a frothy VIX with some champagne in it. Stiff VIX, when we're down here, that's more. It's gotta punch you right in the face as soon as you have it. So yeah.
We need to set up a partnership with the CBOE and any bar that's around there, and we could do something with that.
I'm not hating this idea, which says a lot, because I hate most of the ideas you guys have. I'm just kidding. All right, let's see what else is lighting it up out here. You mentioned it's kind of a bit of a topsy-turvy day coming into showtime. Most of the major indices, we're doing pretty decent paper, but not blowing the doors off. VIX hovering a little bit shy of 200,000 contracts. Its ADV a little bit shy of 500,000, so not even quite half its ADV. SPY at about 1.4 million. The ADV a little bit shy of 3 million. SPX at about 534,000. ADV just a little bit north of 1 million, so a little bit about halfway there. The Qs at about 383,000, their ADV about 750K. And let's talk Russell too. Let's go IWM right now. 212,000 contracts on the tape today, 350 ADV. So Russell lighting it up out there, which is kind of interesting. And in terms of our old friends, let's go to the old equity options now as well, see what's dominating the tape. Number 10, BMY, 141,000. Number 9, Nvidia, old friend Nvidia, 142,000. Number 8, Cisco, 162,000. Cover your ears, Uncle Mike. Number 7, Bank of America, $1.70 on the tape. Number 6, AMD, $1.73. Number 5, tied with, that's interesting. You don't see a tie on this one very often, is Coke. With about $46 right now, off about 3.5 handles. So not a good day here for Coke. And how much are they putting on the tape here? Coke doing about I said $1.73 tie. Number 4, we got 4 Lilly doing 180,000. Number 3 Micron, $1.82. Number 2 Apple, and then once again GE taking that top spot, 250,000 contracts on the tape. Puts dominating the tape, 73%. Of the paper out there. Let's go pull up our old friend GE, see how they're looking right now. Actually, they're hovering at 10 even, off about a third of a point. So it's not a huge day underlying wise, which is kind of interesting. It puts lighting up the tape out here. GE, ever since they've had those kind of issues, have just been lighting up the options tape. You know what else has kind of been lighting it up and moving around? And we haven't really touched on it a lot. We touched on it during our straddles last week, but it's been crazy post-earnings season, the tumult we've seen in the gaming sector in particular. Big names, publishers like EA and Take-Two. We talked about it last week in the earnings. They blew the doors off their earnings to the downside, not in a good way, unfortunately, with just getting annihilated. EA going into their earnings is at about 92.5. they sold off to $80 the next morning. So they got crushed, blew the doors off their straddle. I don't remember what it was offhand, but it wasn't $12. And then, but the interesting stuff, a lot of that narrative, of course, on the crushing of the gaming was also, hey, every tween and young kid out there is playing freaking Fortnite for free or for a little bit of money, and you guys ain't got it. So you guys are getting annihilated. And now, of course, but that seemed like it was very short-lived because we've seen a huge move to the upside now. About 25 handles, EA trading about 105.5 today. So it's rallied about 30-odd% since that nadir after earnings. Today, lighting up the options tape as well. 51,000 contracts on the tape. So pretty much at its ADV of about 53,000 already, about half an hour before showtime. So lighting it up again. EA just tearing it up. Maybe some of that move on the upside coming from the fact that EA now announcing their own Fortnite clone. And apparently people like it because it's trading. I can't imagine free-to-play games, or primarily free-to-play games, are driving these stocks 30-odd%. But still, kind of shows the market share and mind share. Speaking about polls, I want to do an informal poll with you guys here because you guys we all have kids around the same age. I know they're all obsessed with this Fortnite. Do you guys let your kids play the old Fortnite?
No.
Yes.
You do? Oh, your kid's a little older though, right, Mike?
Yeah, my son's 12.
Okay, yeah. If my guy was 12, maybe I would probably look at it. Your guy's what, 9, Mark?
He's 9. No way.
Yeah, and your guy's 9. My guy's 10. I say no too. So I get a lot of flack from him, and ironically from my wife, who says I'm not letting him play the game everyone's playing. But you know what?
I mean, with us, what we do, we won't let them play like a Call of Duty or things like that. We think there is a big difference between like a Call of Duty and a Fortnite, from everything that I've researched on it. But no, Fortnite's one where you're going out and shooting the bad guys, so to speak, and we don't have a problem with that. We do limit his time on that. The general rule is probably 45 minutes to an hour a day that he's allowed to have screen time. But ultimately, with Fortnite, he would play it all day if we'd let him.
Yeah.
And with it, that's why we limit it, of course.
Yeah.
The other thing I'll say that's ingenious about Fortnite, every spare penny he gets, he wants to buy a new Fortnite accessory of some sort. So he's probably spent over the last 2 years about maybe $100 on Fortnite stuff,
which is insane.
Yeah, well, there you go. That's more than the value of a full game.
You know what game my kid likes, and I'll bet yours would. You ever played Roblox?
Yeah, they like that one too. That was an easy one to get on the iPad. Yeah.
That one, Mark is addicted to that. For his birthday, all he wanted was Robux so he could have his private servers, and him and 3 of his friends play.
Just think about that. Think about how funny that is for a second, because my little guy is kind of the same way. Like, can you imagine when you were 10 or 9 or whatever, asking your parents for money for your own private server for something? It didn't even exist. It wasn't even a concept.
No, it's
absurd.
Bananas.
It's madness. But yeah, that's kind of where we are.
Bought a game back then. Now they give you the game for free, and they get you with all these add-ons.
Yeah, if you spend $100,
come on.
If you spend $100 on Fortnite, then I could see why maybe these stocks are moving 30%, because then you're spending more than the value of a full game. A game's about probably $60. So yeah, so $100 on Fortnite over a year. Maybe that's why these names are moving 30-odd% over the course of a week.
He could have easily spent probably over $1,000 if all the stuff that's available on there. He showed me all the stuff that you could buy.
If you let him go hog wild.
There's a lot of kids out there that just have their parents' password and they just buy this crap when they're not even knowing and they don't even think about it.
Well, clearly people are that genre driving a lot of action out here in the options and in the underlying world as well. 30-odd% swing in EA. Again, it's not all attributable, but that's a lot of the blame is coming on the foot of these quote unquote free to play games. But yeah, they got their toe back into it. People apparently like the new one now is apparently called Apex Legends. That's the one everyone's going to want to be talking about. Since we're talking about EA, let's get into a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's get odd. Let's get weird. Let's kick it off with the odd block. We were just talking about the gaming sector. Let's stay there. Let's talk about some paper that's lighting it up today in our old friend EA. Kind of weird stuff. EA, like I mentioned today, up nearly $3. So right about 3% because it's a little bit north of $100. At about 105 right now. Coming into showtime was at about 105.5. So taking a little bit of a break to the of its upside insanity. 30 odd. 25 handles in the past week and change. Just insanity out here. And this is usually a relatively staid name, doesn't move this much. But of interest out here is what caught our eye out here. And like I said, ticker symbol EA. Let's go back. Before we even get to what caught our eye today, let's look at the year that's been. You know, a year ago, it was about 126, so about 20 odd handles north of where it is right now. And it kind of stayed in that low 120 range for the better part of close to half a year, until it got into early summer when it started rallying into the low 130s, and it hit a high in July of about 148. So it rallied a little bit and looking pretty good. Then it kind of sold off towards the latter half of summer, and then it kind of got back down to where we saw it recently. Actually got as low, back in earlier January before the sell-off into... Sure, here we go. About a little bit south of 75. So actually 80 wasn't the nadir. It was 75 about in mid-January. So it's been very topsy-turvy of late out here. More volatile than you expect out here in the gaming sector, which is what draws our eye out here today. Let's see what the paper is up to out here in EA today. Looks like we got ourselves a little bit of some old school, but a little bit different call love. In particular, we got the Feb par call. So yeah, par call is $5 in the money, listeners, which is kind of interesting. Going up for $4.30, pretty much lifting the offer 4,999 times. So 5,000 times pretty much coming in opening today. Of course, it's not an earnings trade because they just had earnings last week. The next cycle, I believe, is on the 7th of May. So this is clearly not an earnings trade. And these are expiring on the 22nd. So these are in a couple of weeks, effectively coming in, getting pretty meaty, fairly in the money calls right here, and lifting the offer to do it about 5,000 times opening. Kind of interesting. Usually when we see the call love, it's probably far out of the, or near term, closer out of the money calls, but definitely in the out of money range, sometimes a vertical. Very rarely do we see in the money calls, let alone ones that have a couple of weeks to go at this point. Mr. Meatball, we're always talking about, stock substitution and things like that, and using in the money calls for trades like that. Not so much, but those are usually probably at least 3 months out, if not 6 months or around that range, if not longer. Using in the money calls with roughly 2 weeks to go. What's your take on that, sir?
Maybe he might be wanting to take delivery, or as a really short dated hedge. Maybe he wants all of his delta exposure gone for a short period of time. That's about the only thing I can come up with.
Do you ever sling near-term calls on a very near-dated basis? I should say, in the money calls on a near-term basis in Carmen line, sir, when you're trading VIX?
Yes, I will, and I'll do it to recreate the stock. So, for instance, let's say I want to get a quick hedge on, and I can buy VXX, let's say, or I can buy, deep in the money. I can buy, let's say, VXX is 40. I can buy the 33 calls for $7. Well, I have all the delta exposure of VXX in that case, without actually having to use all the extra margin. So it's a nice little trade. And so, yeah, I'll do it every now and again.
Yeah, it's definitely, this guy definitely wants his deltas right now, because that's what he's getting. Let's see how these bad boys are looking right now. Why is it telling me these are expired? These are not expired. But either way, he got a decent scoop this morning because the stock has moved a little bit. So maybe he wants a little bit of near-term scoopage, to use a technical term, and obviously using it as a bit of a delta underlying surrogate. And at least in the near term, he was looking pretty good on that trade. We'll keep an eye on this one, see how it works out. But again, an interesting use case. Don't really see a lot of near term in the money. And again, this isn't terribly in the money. It's only about 5 handles. But then again, when you're talking about a thing with a couple of weeks to go, that gets exacerbated. All right, let's see. Let's mark that down to keep an eye on that one. Let's move on to our next one here. What do we got? What do we got? Our Eye of Sauron, always watching, always scanning. Moving on to staying in the entertainment realm, CBS. Ticker symbol, appropriately enough, CBS. Today looks like they're up about $1, trading right around 49.40, so right around 2%. This is a name. Let's look back over the past year again. Tiffany Network, not exactly known for dramatic swings. It's no biotech. Let's see what it's been up to over the past year. I'm trying to think the last time we've even profiled them in the odd block. It's been quite a while because they're not prone to the exaggerated moves that would tend to lend themselves to some options trading. Let's see here. A year ago, about 45.5, exactly a year ago. So about $4 or so shy of where they are right now. Then they rallied up to about 48 by mid. That's a little better. That makes more sense. Keep kicking me year to date. I want the year, full year back. That makes more sense. That's better. That's a better chart. All right. Now we're rolling. 55.5 a year ago. So about $6 north of where it is right now. Then they kind of sold off down to about 49.25, which makes a heck of a lot more sense than our other chart there. And then we saw it kind of vacillating around that 50 handle for a while until summertime. And then it got back up to about 58 in June and then threatened 60 in July. Didn't quite get there. Then it kind of sold off again. It was kind of vacillating in that mid to low 50s range until everyone's favorite day of destruction, the nadir for a lot of names, Christmas Eve. 42 handles when it hit out there. And it's kind of been on the upswing ever since. And that could play into what we're seeing in today's paper. Today we saw someone loving themselves some out-of-the-money call, fairly out-of-the-money calls, 60 calls out in June. Someone gobbling up 9,900 of the June 60s for 40 cents. They were a quarter bid at 40. He took all he could get at 40 cents out there. Should be worth noting. They have earnings today after the bell. So clearly he wanted to get a little bit on before the big announcement. That's a pretty meaty rally that he's looking for. Again, we never quite, at least over the past year, never quite got to that 60 level. The closest they got was around 58 and change back. Actually, they hit 59 back in July, 59.30. So they threatened it back in July, never quite made it. This guy obviously looking for a little bit of some movement here in good old EA. This is the name that's averaging, not EA, sorry, CBS. CBS averaging these days, not a ton of paper. About 2,600, 2,700 contracts a day. So today, a total of 13,000. They're lighting it up respectively out there in CBS. Mr. Meatball, this is kind of a more traditional call love type paper that we usually see as opposed to the EA stuff, near term, in the money. This is a little bit longer term and pretty far out of the money, right ahead of earnings. What do you think of our old friend here, the pre-earnings, far out of the money call placer?
It's an interesting play. I clearly think it's going up. So, I've seen dumber things than someone. I mean, and if you look, EA has had such a bad run. At a certain point, you got to say, all right, well, maybe John Madden's gonna make another appearance and things will get better for him. That's what I think is going on here.
Our producer's just kicking me here. There's some more news on CBS coming out. Looks like a couple days ago. There was an insider trading lawsuit going on right now for a couple $100 million.
There's all sorts of problems at CBS.
Yeah, apparently there were some insiders unloading stock before some bad news. Go figure. That probably wouldn't drive the call sales, but then insiders have been maybe playing here before, so maybe this is someone who feels that they know something. Either way, no one recommends going out and loading up on some 60s, but maybe you want to keep an eye on these. Maybe some verticals are in order. Take advantage of, again, the distortions. When someone's lifting 10,000 contracts on the offer out in June, pretty far out of the money, that allows you to do other things around it, even if you don't necessarily agree with the initial outlay. And we're going to wrap it up on the odd block, looking today and also looking back a little bit at the same time. Back to our old friend. You remember from I think it might have been last show, Mark. I think it was actually. Our old friend CenturyLink. We were talking about some paper in them. They had earnings coming out, I believe, on the 13th. So a couple days after our last show, which was on the 11th. And we were profiling a ton of puts, lighting it up. There were the Feb 14 half puts, paper gobbling up nearly 6,000 of those for 80 cents. The Feb 13 puts, paper looks like taking those mid-market for about 9,000, and April 10 puts we also saw as well, which is pretty far out of the money. Those going up for about 18 cents, pretty close to the offer there. So it looks like there was pretty much a put palooza going on to the downside. Post earnings, we had earnings on the 13th. Coming into the show today, We're seeing CenturyLink off $1.66 or so. So nearly about a little over 11%, so right around the 13 handle. So seems like maybe some of that near-term downside concern was warranted. Today, though, what we saw is some more paper, but on the call side. The March 14s coming in. Paper looks like crushing a few of these 6,000 times and change, going up below the bid. They were 24-cent bid. They went up for 23 cents and some splits there. So below the bid, opening over there on the Philly, they were 24 at 27. So it looks like maybe someone trying to get in there and harvest. This is opening, so this is not someone dumping some open call positions here. And looks like maybe someone trying to get in, harvest a little bit of the old risk premium on the underlying, not feeling any upside anytime soon. And I guess in today's sell-off, maybe you can't blame them. And looking to try to get any bids they can on calls looking out here. Worth noting, too, excuse me, let's check a little bit on those puts we talked about last week, because it looks like they kind of worked out, particularly the 14 halves. The 13s, though, are even at the money, so I think both of them probably looking pretty good if they were indeed buying. And coming into today's show, looking at the 14 halves in particular, there are still about 8,000 open on that strike. So it looks like our friend, if he was indeed opening buying, and that's what he was appeared to be doing back on the 11th, he hasn't dumped these yet. So they were at about 79, almost 80 cents. And coming into this morning, there was about 7,000 and change open out there. With looks like about 500 traded today. And yes, you saw, so not many at all. Yesterday we saw about 1,000, but still nowhere near the amount of OI. They were trading for about 65 cents yesterday. So they were off a little bit yesterday, but today's sell-off probably fixed that a little bit. So maybe he was waiting for today. You haven't seen a big print for those going up. The big print today really is the calls, 6,000 of the March 14s. So Mr. Meatball, a couple of things worth noting here, and actually looking at the Feb 13 puts coming into today, those are still open too. The number one size open interest position in CTL right now are the Feb 13s with about 23,000 and change open. So Mr. Meatball, kind of a tale of a couple of tapes here. First off, we have some put trades that seems like they were pretty well timed, yet still on, which is kind of weird. And then secondly, we have someone coming in and crushing through the bid to get some upside calls on the sale side as well. So what's your take on both of these, sir?
Looks like someone is trying to take off some delta, and someone is trying to collect some premium. So, post earnings, the guy's now clear of getting a huge pop. So he probably is less afraid of selling that upside. So he's harvesting some risk premium. And, you just saw the earnings weren't that great. So, if you're not looking for a big rally anytime soon, then guess what? This could be a nice trade. So
yeah, and clearly
that's my best guess.
Clearly he wasn't reticent to crush any bids. Let me just check really quickly if any trades have gone up since then that might be lighting up these puts. Looks like some more puts have traded since the show started, but more of those in the April range, April 19s and 15s, which is kind of weird, but not the ones we're looking at, which is closing on the Feb 13. This is, we talked about this before, Mr. Meatball. You put on some well-timed puts. Maybe you take those bad boys off when the stock's off, 12%.
You would think.
That would be probably standard operating procedure, but again.
Some people don't like doing that.
More people than you would think, given the paper we profile here on the show, don't like taking off their hedge or their spec, whatever it is, when it goes their way, which isn't, maybe they're getting greedy. Maybe they think there's more downside. Either way, they don't have a lot of time to go in these trades. Those were, what were those? Those are Febs. So not a heck of a lot more time to go. So maybe they feel it's downside ahoy. We shall see. Well, we already kept an eye on those. We'll keep an eye on them a little bit more to see how CTL, how it shuts out. Maybe we'll check it after expiration to see what they actually did. But at least on the near term here, excuse me, not seeing a lot of closing activity on paper that appears to have done pretty well. Let's see what else is doing pretty well. Let's see if you guys did well with your questions. It's time to head on into the Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the old Mail Block. People chiming in with their ideas for the stiff fix. We'll get to that in a little bit. Everybody's chiming on this. But look, before we get to that, let's see what we asked you guys this week. Our question of the week. You know, everyone's hitting us up on this show on Vol Views about our old friend, the VXXB. Terrible name. They got to get rid of the B. That's a conversation for another day. Instead, we asked you, hey, you know, VXX is dead. Long live VXXB. So there's not quite a new kid, but a new-ish kid on the Vol block. Are you guys slinging that bad boy? If not, how are you getting your Vol fix these days? I gave you some other choices. Could be VIX, TVIX, SVXY. 4 choices, quite frankly. Yes, you're jumping in. No, the spreads are too wide. Or no, you prefer a different product like a TVIX or an SVXY, something like that. Or no, you prefer standard, old-school mothership VIX. Let's start with Mr. Uncle Mike, just for fun. Mr. Uncle Mike, sir, if you have a preference or if you have a vote, have at it. And more importantly, what do you think our audience is choosing, sir?
I think our audience is going to go. I'm going to go with stiff VIX on both accords. Just good old fashioned the VIX itself.
They're gonna stay with the one that brought them to the dance, huh? Okay, I could see that.
Yeah, for sure.
Mr. Meatball, do you agree, or you got point counterpoint?
I think our audience is more of a VXX audience than certainly F Contango Trader is.
That man loves himself some VXXB.
He's getting so mad. He keeps tweeting at me. I mean, dude.
Yeah, he sends about 10 tweets into the show per episode, pretty much.
So I personally think most of the audience is going to be used VXXB. Me, you know, I'm a big fan of good old VIX. I like, I'm a big fan of what we call tax treatment, which makes VIX a little nicer than VXXB. And, you know, but I will say we're starting to see some interesting volume in VXX as well. In VXXB, it's starting to get some volume. It's starting to pick up.
It's getting there. It's not quite there for our friend Contango. What do you say lately? Oh, yeah. He said the bid-ask spreads in VXXB still suck, and he's mad at SIBO. He wants that penny-wide market back. He doesn't realize it's going to take a little while. But things seem like it's getting a little bit better out there. It's not quite as the wasteland that it was.
Irritated stuff, you can get almost anything you want done. And I don't know that VXXB is in the penny pilot program anyway yet. I don't know why they call it a pilot program, by the way, but
the pilot launched when we did in January of 2007. So
and they
it's
still call it a pilot.
Over a dozen years old, and it's still a pilot. Yeah, that's a whole conversation for another day. But we feel your pain, Mr. Contango Trader out there. Let's see what you guys are all weighing in on your thoughts here for the VIX. Who is it? Oh, Sakib over there at Reuters. He wants to know if we're trying to improve. He tweeted us a picture of a drink called the Vixen. I don't know where this is from, but it's got vodka, fresh pear juice, Lady Grey simple syrup, thyme-flecked pear chip garnish. So it's got the vodka. I'm down with that. And then, I don't know, pear juice. You guys down with this? Lady Grey simple syrup is kind of losing me towards the end.
I don't think you need the simple syrup or the, I would, that's where the champagne would come in to get that bubbly. That's where I would be. But, you know how it is.
I'm going to tell him that we mock his suggestion.
It doesn't sound terrible. And tell you what we're going to do. You know what we're going to do, Mark? I've got my SIBO event coming in June. And what we're going to do is the three of us are going to, I'm assuming we're going to do another live option block first week of June. And what we'll do is Michael venture his way out of the northwest suburbs for part of for 15 minutes, and we'll all enjoy a stiff VIX drink together based on the best suggestion.
I don't know. He sent us a screenshot. This must be from RMC, where also they have a drink called the Vixen, right? It looks like it's got SIBO VIX on the bottom, so it's got to be RMC or some other conference where he went to this VIX drink. But yeah, I think, I don't know. Let's see what else we got here for ideas. Oh, our listener here in the live chat, Austin, he says, stiff VIX has 2 shots of lime vodka. Okay, well, okay, maybe 2 shots of regular vodka. Okay, he's mixing it up. 2 shots. Oh, now he's losing me. 2 shots of cherry schnapps. A splash of club soda over ice. Garnish with a lime wedge and cherry, and enjoy. What do you guys think of that one, huh?
It's not terrible.
It's better. I like that better.
Lime wedge and a cherry? seems a little.
He's going double garnish. You know, it's got to be in your face, Mr. Uncle Mike. You like that one better?
I got to admit, I don't drink hard liquor, so I'm probably not the person to do this. I'm just a beer drinker. I'll drink a beer now and then, but I'm probably not a good person to do a stiff VIX. But when to me, a stiff VIX is like a Heineken, I guess.
When you're coming to the live event, we're all going to have a stiff VIX, and it's going to be a very sloppy show.
I'll give a moratorium on that rule just for a stiff VIX.
Yeah, you know, I envision in my head some sort of crazy, stiffer version of like a Shuri Temple. So maybe we'll get something going like that. I don't know. But I like this one. I think Austin's on the right track more so than Saqib over there at Reuters, who's sending us some SIBO peer crazy madness. We're not down with the peer on that one. If you guys will keep looking at your recommendations here for drinks, but it's not all about cocktails and Fortnite here on the show today, even though you guys are liking both of those. Let's see. Dave B has a question. He asks, "Hi, I have a question." Well, you wrote to the right place, Dave. He goes on to write my question is about what is the best strategy to use for my trading system. I typically am only right on about 3 or 4 trades out of every 10 with long stock. The trades that I am wrong on, I take a small loss, somewhere between 5 to 10%. But only about 1 to 2% of the total capital, as I typically take 10% positions. The trades that I am right on, however, I typically make about 50% up to 200% over a 3 to 12 month period. So he's cutting his losers short, and he's letting his winners ride. Sounds like he's doing pretty good here. He goes on to say, I want to find an option strategy to increase returns via leverage, but keep total portfolio risk per trade about the same. Would deep in the money calls or spreads make sense to you? Or is there another strategy I could or should consider? Thank you, Dave B. Well, this one came in when we were doing another show, so I kind of had a chance to weigh in on it a little bit, but I want to make sure we talked about it on this show too, because I think this kind of strategy could benefit a lot of the listeners of this program too. Now, we were kind of talking about in the money calls earlier. Typically, when we're talking in the money calls, it's usually on a stock substitution play, and it's usually a little bit longer term. It sounds like he's kind of down with that approach because the man likes slinging himself some long underlying. So are you guys down with his deep in the money call suggestion, or do you prefer something else? Let's go back the other way. Start with the meatball.
Well, you just heard me say that I do that exactly to reduce leverage. And you don't have to add on. You can increase leverage and not add risk by just doing, instead of buying 100 shares, buying a deep in the money call once, and don't buy 2 or 3. Then you will get a quote unquote higher return, but you'll actually have a little more leverage, and you've got capped downside. That's what the other thing I really like about kind of an in the money call is that you wake up the next day and you don't have. And it's down big, you actually are capped on your downside. Even with a 100 delta call, a 100 delta call can go to a 0 delta, while this, and the stock can trade well below in the money calls. Look at Apple calls, right? There was 170 calls 4 months ago were 100 deltas. So that's kind of the thing to think about, folks. I don't think it's a bad idea. Obviously. Other ideas, I don't know. I'd have to spend a lot of time looking at what you're doing to take it any further than yes. I think in the money calls or in the money puts as a replacement for stock is completely viable.
Yeah, that's one of our favorite approaches. We talk about it on a lot of our shows. We talked about it the other day on our options playbook as well, I think, where this question came up, because they talk a lot of stock substitution on that show. That's a perfect use case for it. I think you hit the nail around the head, Mark. People sometimes think, because they're saving all this capital buying the calls instead of the stock, they have to buy 6 or 10 instead of, they can just do the 1 or 2, keep the capital in their account. So if you can dial up or down the leverage as you see fit. Just because you're buying it on leverage doesn't mean you have to buy 10 to put all the capital back to work. You can dial that back, leave some cash in your account to do other things, and maybe make other trades, or maybe just keep it for for some reserves in case things, like you mentioned, some of your trades where you take a little bit of a loss. Mr. Uncle Mike, are you a fan of the in the money, deep in the money, as he puts it, call approach here for stock substitution? You like something better for him?
I like it if there's liquidity on it. So if he's doing like an Apple or a Google or something where you can get some pretty good liquidity, yes. If he's doing this in lesser known stocks to where there's not a lot of liquidity and the bid-ask spread is 9 miles wide, then no, I don't. So I think it's based upon what stocks you're doing it with. The only thing I don't like about deep in the money calls is when the liquidity is so slim. But if you're doing it on high name stocks, I think it's a great idea. If you are doing it on stocks that are a little bit lesser known, you got to get a little bit more creative with it. And that maybe you need to do something with a spread or set something up to where you have 100 deltas and you have less money on the table. So for example, let's say an oversimplified example, let's say the stock's not quite as liquid. You could buy 2 at the money calls for every 100 shares you were going to buy, and there's your 100 deltas. Now, of course, there's time decay risk. There's things like that with which you have to mitigate. But ultimately, I think that the deep in the money call plan would be the simplest. But I just caution you, make sure that you have the liquidity. Otherwise, it will really hurt when trying to get filled.
Excellent point. Now, we always talk about the liquidity illusion. I think that's what our buddy Ewan Sclear used to call it, the illusion of liquidity out there in the options market. It seems very deep and liquid when you get beyond front month, at the money, Apple, SPY, and Google and Facebook. It gets a little bit thinner. So if you want to do these, what was the name again? Dave B. Make sure if you're going 3 months out, 6 months out, a year, which is a typical use case for a stock substitution, as Uncle Mike alluded to, make sure those spreads aren't prohibitive. If that's the case, you may be losing more just in slippage and round trips than really the strategy is worth. So if that's the case, if the options are super wide, maybe it's not the bit of strategery you want to go for, then maybe you got to get a little bit more creative. Maybe go some verticals or things like that, where you're still taking the call approach, maybe not in the money. Maybe you go a little bit more closer to expiration and you go a little bit closer to at the money. Maybe an at the money vertical, slightly out of the money. Things like that you could do to mitigate your outlay and still give you that upside exposure, but maybe don't have the same issues with bid-ask spread. All right, we got a couple people here weighing in on USO. They're similar questions, so I'll do them both. We've got Lalaz, 2 L's, Lalaz. Lalaz wants to know, what do you guys think of call verticals in USO here? Maybe 3 month, 5 or 10% out of the money. Is it worth financing that with a put? So he's got an addendum. And then we've got DeQuinta also firing in about USO. He says, I've been lured in by the ongoing sell-off in crude oil, and I'm thinking about setting up a longer-term stock replacement. Oh, here we go, stock replacement again. Stock replacement strategy in the USO ETF. Let's see. I have a couple of questions. First off, he's got a 3-parter. Here we go. With USO dropping below $11, is it even worth doing, or should I just buy the shares instead? Is there a certain threshold where stock replacement stops making sense? B, my proposed construction is an almost 6-month strategy with July 8 calls for 310. So my outlay for 100 shares is 3,100 versus 10,800, which is, I think he wrote this in. I think this both came in like a week and change ago. So obviously USO has moved a little bit since then. It was about obviously 1080 back then. C, is it even worth selling a Jan 11.5 call and limiting all of my upside just to collect 15 cents, or should I keep it open from here? All right, so a lot to unpack here. The first question is the more straightforward. What do we think about USO verticals in general here, call verticals, 3 month or 6 month, and also is it worth financing those with a put? Then we have the addendums of what about USO in general as a stock substitution, and then also what else we have? He wants to do kind of what my buddy Brian on Options Playbook refers to as a fig leaf, buying a longer term in the money call. In this case, he was talking about close to $3 in the money for the July 8s for about $3. And then maybe turning around and financing it with some Jan of next year calls for 11.5. So he's kind of tying himself into a roughly $3.50 diagonal there, calendar. So there's a lot to unpack here. So first off, maybe your views on USO in general. I think most of us take kind of a bit of a dim view on it. Also, these trades came in about a week and change ago. USO has moved a bit. It's about 11.5 now. So maybe some of that upside, maybe not so much. Mr. Uncle Mike, we'll start with you. Thoughts on USO if you have them? B, if you're bullish, do you like call verticals or stock substitution? And then C, all sorts of addendums. Do you think it's even worth doing stock substitution at stocks maybe at around $10 or below?
For A, not a fan of USO unless you're trying to do a predictably crappy trade like the Mark and the Rock Lobster like to do in some way, shape, or form. I'm willing to bet such a thing would exist in USO as it does in some of the volatility products. B, do I like verticals? for upside? I typically do. I mean, it depends on how much upside you're looking to get. If you're looking for oil to have a major rally, then you may want to consider just buying an out-of-the-money call and financing the theta with some put spreads on dips and something along those lines. And what was C again? I don't remember that one yet. You're going to have to repeat C for me. Sorry.
C was, hold on, I just scrolled off of it. Oh, he wants to know if he buys the in-the-money call like 6 months out or so, is it even worth selling an additional, like to try to finance it, you know? So he wants to buy an 8 call, which was roughly $3 in the money, and then turn around and sell an 11.5 strike call in Jan against it. He means this Jan. He wants to obviously do it, you know, nearer term and keep selling a call every month. Is it worth limiting his upside for what he says is 15 cents, or should he just do the in-the-money stock substitution instead?
Got it. I mean, you can, but you're basically, and I'm guessing it probably meant next Jan, just because we're in February now. But who knows?
Yeah, this came in a couple of weeks ago, so right around the time of expiration.
I'm sorry. So yeah, with that, I think you can do it, but you're essentially just doing a covered call trade. And if you're looking for a lot of upside, I think what you want to do as a means of financing, I would prefer selling a call spread. So that way, if for some reason you do get a little bit of a major pop, then you have the call spread, and for that extra penny or two that you had to pay to buy that spread, it might not be a bad idea. So sometimes buying junk garbage like that isn't a bad idea, because if you do get the major rally, sometimes you can get the best of both worlds, and the cost of getting the best of both worlds is only a couple pennies sometimes.
Yeah, you know, there's a lot of different ways to skin this USO cat. Mr. Meatball, we talked about it a bit before. It's been a while since we've weighed in on USO. So maybe A, your thoughts in general on USO. B, do you like verticals here? Or C, are you more of a stock substitution type fan? And if so, do you like doing the selling the call against it to finance it? And also, do you have a rule of thumb for how cheap the stock has to be where you will no longer consider stock substitution, sir? Lots of unpack.
Yeah, I mean, at $10, I get the long-term option. I'm not a big USO fan myself. I would be more interested in doing it as kind of like finding some stocks that will really benefit from a rally in oil rather than just using USO. Obviously, you're entitled to what you want to do. But I think that you could do a lot better not using USO. That would just be my.
Yeah, you know, USO, we've said it before. I think so maybe our main takeaway is, not USO. If you like, obviously a lot of you guys have crude and energy type spreads on the brain. Stay tuned. We'll be back pretty soon, in about half an hour or so, on our TWIFO, This Week in Futures Options program, where we'll talk WTI. Spoiler alert, it's going to be on that show. So that might be an interesting way to go. USO suffers from a lot of the issues we talked about with all these other ETPs that are out there trying to replicate some sort of futures position. They have the roll yield and all the other things that hit a thing like a VXX. It also impacts a thing like a USO, so you're not going to get maybe the same tracking that you'd want versus if you had WTI itself. So maybe that's an issue where you want to go look at the big mothership products instead of, I know people like the ETFs. They're very friendly, and equity, you can put them in a securities account and all that kind of stuff. But the brokers have made it pretty easy to activate those futures and futures options accounts now. It's pretty much just one button in most major brokers. It used to be you have to file additional paperwork and fax it in and all this garbage. All that's gone. They really want to make it seamless for you guys. So in that case, if that's what's keeping you away from it, those days are kind of behind us, thankfully. And so that's probably, if you're going to do these types of trades, that's where I would be looking versus USO. But I get you guys still like your USO. And unfortunately, I'm talking, securities that attempt to replicate replicate WTI. It's one of the only games in town. So it's that or some sort of basket of oil names. So yeah, if that's where you want to go, but I don't think any of us really here super jazzed about USO at the end of the day. So I guess probably all of us would probably say no on your various verticals. All right, keep the USO love, keep all the other love coming. Lots of questions here. We probably do a whole show on them, but we got to keep rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the block because there's other things happening this week as opposed to just your questions on USO and your love of Fortnite and all sorts of other madness. We do still have a little bit. Most of the big earnings names have popped off, but we do still have some names, including coming up this week. We have, our old friend Nvidia popping off after the bell today. I mean, they kind of let the cat out of the bag with their pre-announcement to the downside, but Apple did the same thing, and they still had some interesting movement out there, so pay attention to that. Applied Materials coming out after the bell as well today, so still some names to keep an eye on coming into PepsiCo tomorrow. If you've been listening, and John Dairy, if you've been listening to Options Playbook Radio, Brian had a very interesting calendar, I believe it was, a diagonal going into Pepsi earnings, so if you listen to that one, I think it has hit the network this morning, so you can check it out right now. Maybe, if you're lucky, we'll also play one in the interim between here and TWIFO. We'll talk about a little bit some Nvidia earnings trades too, so stay tuned for that. But in general here, a lot of interesting names still popping off. Of course, we still have the ongoing macro saga dance, call it what you will. That is trade war on again, off again. So a lot of madness unfolding there. Let's start with Uncle Mike, sir. What do you keep an eye on for the rest of the week into the old weekend?
Well, I think 2,700 is a number that I want to keep my eye on the S&P, 270, of course, and SPY to see if we can hold that, as well as the ongoing macro saga. I mean, I think the numbers are the big thing. And for right now, things are generally good in our economy. So curious to see how the market will react. I mean, I like this market right now, but wish I could put more in, but I got to obey my rules.
Got to obey your rules, like not buying verticals in USO. The rules say what the rules say. Mr. Meatball, what are you watching for the rest of the week, sir?
Yeah, I think just kind of how the market behaves. We've been bouncing back and forth around this 200-day moving average. And I'm watching that VIX. I'd like to see – I will feel better about this market when I see the VIX trade with a 14. I'll also feel better about this market when we settle 15.25 tomorrow and on the nose, and Mark is eating crow, even though Andrew's going to be on the show.
Andrew will be there. He'll take all your thunder if that happens, though. So you're kind of missing out. You may want to sneak in there just to get your – if it does come to pass that you somehow find the nut at the end of the day, the blind squirrel, and you get it on the – we shall see. Looking pretty decent right now. But again, a day is an eternity, 24 hours in the vol realm. All it takes is a mere whisper on a certain Twitter account, and we're back up to the 17 handle where I need it to be for tomorrow. So,
yes,
we shall all see collectively. Unfortunately, listeners, that music, as fun as it is, means we're coming to the end of this joyous sojourn through the world of options. So we talked a lot of fun stuff, talked your USO trades, talked a bunch of fun strategery, even talked your crazy Fortnite trading options love and all kinds of craziness and everything else. And your ideas for the stiff fix. Keep hitting us up with those. Maybe we'll actually make this thing. We shall see. But before we go, let's go around the horn, starting with, let's go back to ye old Uncle Mike. Uncle Mike, sir, if I'm intrigued about what you're saying here, maybe I want to learn more. Maybe I want to click on the Fox. Where should I go? What should I do?
By all means, go to stcharleswealth.com. If you're interested in someone to work with as a financial advisor, feel free to contact me. Go to my website, stcharleswealth.com, for more information.
There you go, stcharleswealth.com to learn more. Click on the Fox. If you all keep doing it, he's going to make it do something cool soon. So just keep doing it. And while you're at it, Mr. Meatball, if I want to go somewhere and click on something, where should I go? What should I do?
Go to optionpit.com/masterria, and we'll show you how to use options as an investment vehicle, which is what they should be used for. So, if you want someone to manage your money, you go to Mike. If you want to do it yourself, you come to me, and we'll teach you how to do it.
And I'm looking forward.
optionpit.com/masterria.
I'm looking forward to your upcoming class on USO verticals, sir. I'm very excited.
Yes. My biggest class.
Biggest webinar. I guess you probably would actually get a lot of traction for that, which is maybe a sign of the sad state of affairs out there in the energy ETPs. If you're interested in USO verticals and energy and all these other products, maybe you also want, spoiler alert, we're going to talk some more equity volatility because the Russell guys will be in here in a little bit. Then join us for TWIFO in about exactly 30 minutes, 27 minutes. In the meantime, if you're listening live, we'll beam in some good stuff. maybe you can sink your teeth into some cool Nvidia earnings strategies and everything else. And then we'll be back here in exactly 27 minutes to talk some energy, talk some equity volatility, talk some metals, all sorts of good stuff with some TWIFO. Otherwise, we'll see you back here next week for more. Actually, Monday is a holiday, so we will be off on Monday. And obviously, it's a big travel week for a lot of people next week. So we'll see what we got going on in terms of live shows. But don't worry, stuff will be hitting the network. Stay tuned for that, and we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.